Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Wednesday, April 3rd, 2013. Well, a change of trend today and a candle that's made a lower high and a lower low. Previous day's trading we suggested there was a possibility of that change of trend. We had a spinning top candle, a black body, and it was a type of bearish harami pattern, and today confirmation of that change of trend with the candle making a lower high and a lower low. The only problem for the sellers here is that we have a white candle, so the buyers have made an amount of net bullish progress on the day between the open and the close, and that's not the type of dynamics that we'd like to see with a change of trend. We've also seen the buyers take control of this market by the close of trading, and that does suggest that there may not be any follow through. We have a shadow on the bottom of this candle, and it highlights the price rejection from this 128 level. If we look at that level, the market testing down below that level in the recent past has been quite significant, and there's been quite a lot of upside price rejection for most occasions when the market tested down just to or just below that 128 level. So it is very, very solid support for this market. Just down below there we have this large zone as well, extending from that 127.50 down to 126.40, 126.50 area roughly, and so very solid support. By the same token, however, for the last three trading periods in a row, including today, we've seen downside price rejection from the 128.57 level, previous support, now acting as resistance to this market. And in this last couple of weeks, the market has tested to or just above that level on many occasions and been rejected from them. We see these shadows on the top of these candles showing the buyers losing commitment above those areas. So very, very solid resistance. So we will need to see some solid upside momentum from the buyers for the market to trade higher. It does suggest that this market has potential to trade to lower levels, although remember, solid support down below. So this market really is bound in some sort of a congestion area. Now that congestion area has formed a type of a flag pattern, and here we see previously when the market formed a flag pattern we had a target down around the 126.50 level, and the market has almost reached it. It's done well to trade down to those levels, and so another flag consistent with the previous one, a little bit more consolidation than the previous one, not as fast forming, but we should be waiting for a breakout generally to the downside. They tend to be continuation patterns, but they can be reversal patterns, so we should look to either side. But probability is that it will be a breakout to the downside in line with the higher timeframes. The market's trading below each of the Ichimoku indicators, so the likelihood is that the breakout will be to the downside. We need to have a lot more confidence in that breakout to the downside. The breakout should be a close down below this bottom barrier, and what we'd like to see is a bearish close. The problem here, however, is that we do have this solid support close by, so it may limit where the market trades to and may limit the target. Now the target, debatable whether the target would be the first time frame downtrend leading into the pattern, or the second time frame downtrend. So it's the measured move, so it's the trend leading into the pattern projected down. So on the conservative side, I'd be looking at this first time frame downtrend moving into the pattern, and it gives us a target roughly down around this 125 level. So I'm not too sure that the market will do that very easily because of the solid support below, but it does give us something to aim for, and we should watch if we do see that breakout down below. No guarantee that we will see that breakout, can't preempt the market, but a solid bearish close will increase the likelihood that the market will test down to strongly lower levels. Now in terms of the previous Fibonacci extension, for the previous day's trading we saw the market test exactly to the 61.8% level and be rejected from there in a very solid way with a spinning top type candle, and a candle where the sellers closed with control. And yes, that did lead to that change of trend today, although today we're not seeing the sellers back that change of trend. They're really not supporting the market making a lower high and a lower low, and the buyers have taken control of the market as mentioned previously. But in terms of the current Fibonacci extension here, we've seen the market test down below the 23.6% level and be rejected from there. with the buyers closing with control of white body candle, spinning top type candle, it does suggest that there is a good possibility of a change of trend. So let's look to the high of this current candle for a potential higher high and higher low and a potential change of trend. Always remembering, however, that we do have that solid resistance overhead. So if we do see a solid bullish close up above there, there is a possibility the market could trade to higher levels. And in terms of the previous Fibonacci retracement for the previous day's candle, strong downside price rejection from the 38.2% level. That solid bearish close did suggest good potential for a change of trend. We've seen that, but not the type of trend change that we'd like to see. And for the Fibonacci retracement based on the current first time frame downtrend, here we've seen the market trade through the 38.2, through the 50% failed to close down below there, through the 61.8% to be rejected from there, the market trading up. It does suggest that there is a good possibility of the market trading to the higher side, and we should be looking to a potential higher high and higher low for a change of trend. Now in terms of Ichimoku, obviously a bearish market in all three time frames. The market has a bearish bias on the long term time frame by trading down below the cloud, bearish in the medium term time frame by trading below the Kijun-sen, and also bearish in the medium term time frame by trading below the Tenkan-sen. The Chikou span is below the corresponding price action, so confirming all of this bearishness, and all of that does suggest that the likely breakout from that flag pattern that I highlighted just previously would be to the downside, but downside potential is limited by this very solid support down below. Looking at the Kijun-sen, that is pointing flat. There is a good possibility of price action being attracted back towards a flat Kijun-sen. Over the previous couple of days, price action has attempted to be attracted back towards it, but the solid resistance at 128.57 has held, and that will be crucial to this market moving forward, as will the solid support down below this 128 level.